Okay, now as you can see now on the chart, as you can see on the chart, as you can see on the chart, we're actually waiting for price to come inside this area. We are waiting for price to take out the last structural liquidity, like for price to mitigate here and keep buying. Now, if you look at this zone now, you see that price actually mitigated on this our structural liquidity and keep buying, meaning that people are actually buying from here. So those people that are actually buying from here, we are seeing them as liquidity. That price can actually come from here and take them out and keep pushing up. So that's how to identify liquidities. So I will explain better after explaining about BS of market. So I will clean everything now. Let me step by step explain BS of market, how you can actually identify the daily movement of the market. After that, then I'll put everything together, both structure and the daily BS, and you see how you can actually use it in your normal trading. Now let's go. Now, on the daily, what is daily BS? Daily BS is actually talking about the direction of the market for the day, be it uptrend or a downtrend. Now, on the daily BS of the market, we have three things we look out. We look out on the candlesticks. Very, very important. The candlesticks. Let me start from the candlesticks. This is a candlestick. Let's call this a bullish candlestick. Let's call it a bullish candlestick. Put a wick. Let me also increase the texture of this candle. We also have a bearish candlestick like this. This is a bearish candlestick.
No, they're right. Okay. Look at you, mate.
We're actually talking about identification of the direction of the market for the day. So we can actually see this to be our bearish candle.
After man.
Now, on a basic knowledge, we already know that this is a bullish candle, and in a bullish candle, this area will be our open. From here, price will open, and this here will be our what? Closing, because we are actually buying. This area is our opening zone and closing zone on bullish price, while this will be our weak. This area will be our weak area. Same thing here on sell on bearish market. Here will be our open, and price will then close here. This is candlesticks for you, and this area we call this two area will be our weak area, which is weak candle weak. This area is candle weak, while this is the full body. While price opens from here, close from here in a bullish, while on a bullish pattern, price opens from here and close from here. Now we're actually explaining how this bearish direction of market works.
I know we land with that. Now pavement. Now pavement with that one.
Please, can you mute yourself, please? So now, as you can see, this is a bullish candle and this is a bearish candle. Now, on this bullish and bearish candle, we have three ways in which you can actually identify whether the price is actually going in up direction or in a down direction. Now, all these things are what? Targeted on what? The higher time frame, which is on a daily time frame. That's where we are going to be looking at for all these things. We have the first one, continuation. We have the second one, reversal, and we have the third one, consolidation. Now, these are the three things we are going to be talking about. The first one is continuation. Continuation. We have continuation. We have reversal. And we also have the last one, which is what? Consolidation. And I will explain each of every of this candle, how it works. Now we're going to start from the continuation pattern. How to identify the trend of the market. That's where we are now. We're going to start from the continuation pattern. Now, in a situation whereby on the daily time frame price, the candlestick is actually doing something like this. On the daily time frame, we have this week, and we also have this body, this candle now formed, and this candle also formed. And this let's okay, for example, today is Tuesday. Okay, let me assume this is Monday, this is Tuesday, this is Wednesday. Now on the Monday, market closed and the candle of Monday formed like this. Now on getting to Tuesday, market closed with body above Monday week, above Monday high, because price must actually take out high of the day. So now one thing you have to note on this particular thing. I know it will be confusing a little bit, but you should understand this. Now on Monday, price closed with full body, created these 2 weeks. On Tuesday, price came back and take out the high of that week, closing with a full body. Now, for price to close with a full body, that simply means on the Wednesday, we should be expecting that the next candle that will occur should also come and take out the high of this market. Should also come and take out the high of the what? Tuesday. So on Wednesday, as you can see, price came back and take out this high. Meaning that when price take out this high closing with the body, it means a continuation that even on Thursday, we should also expect that price will keep on moving up. Because in candlestick patterns, these are continuational patterns, as you can see. So on the Tuesday, price closed with full body, meaning that on Wednesday, we should expect that price must come and take out this high. It is a must. Now, on Thursday, on Wednesday chart, market also closed with the body, taking out this side. That simply means on Thursday, we should also expect that we should be having more of buy because price actually closed with the body. So this today here, we are also going to be expecting that price should also take out this high, meaning that the only entry we'll be looking for is what? Price to take out the high of the what? Thursday morning. So that simply means the only setup we'll be looking for that day is what? A buy setup. Now, this is for what? Continuational market. Now, we also have a reversal market. This same thing also happens in a bearish. Let me also explain in a bearish pattern. Okay, this is on a bearish pattern. This is Monday. On the Monday market, let me put it red candle. On a Monday, price created this candle. On Tuesday, price closed with body. Remember, I don't normally trade on Monday. Now, after Monday, on Tuesday, price closed with the body, full body. Closed with full body here. Meaning that on Wednesday, we'll be looking for more of sell. The market will be more of sell. That the daily thing that will happen that day, we should be expecting more of sales. So now this is what? Tuesday. Market closed with body on Tuesday, meaning a continuational move. Even in candle chart, I also send you guys candle chart people should work on. So even on candle chart, you see that this is a continuational pattern on candle. Now, since this is a continuational candle, on Wednesday, price must actually come and take out this low. It is a must because on Tuesday, this candle is actually telling us that we already have what? We already have body, this candle close with the full body here. Meaning that the next day, which is Wednesday, price must actually come and take out this high. It is a must. So that simply means once price opens, the next thing, like if price opens in the market on Wednesday, the first thing price will do is to push it to retrace back like 50% of this candle, sometimes 25% if you observe. And after that, On Wednesday, the major move of the market or direction of the market for the day will be down. Price will take out this one. We are going to still check it on the chart to see what if I'm making sense. So this is for a continuational pattern, be it uptrend or what, a downtrend. So in uptrend, once you are seeing this thing on a daily time frame, you should focus more on buying because this is a continuational candle and price is actually closing with body. Once you are actually seeing it with body on a sell, you should also focus on what, selling the market. Now let's move to the next one now, which is reversal. Now on a bullish pattern here, let's assume the price is actually going in a bullish form like this. This is Monday. Let's call it Monday candle. This is on Monday. Remember, we also have Friday last week, so that's how we calculate it. But let me just use Monday. This is Monday. On Monday, price created this particular candle as our daily candle. Now, getting to Tuesday, price did something like this. Price did something like this. Close with week like this. Swipe this high. And after taking this high, price close with week. It close with week for that day. For this reason, this is a reversal pattern. It means that if you check this candle now, this is a pin box. If you check your candle chart, candlestick chart pattern, this is a pin box, which means reversal candle. Now, and secondly, price have actually closed with a week. And for price to close with a week, it simply means that for the next day, which is Wednesday, we should expect more of sale in the market. So on Wednesday, we are going to be expecting something like this. Price should open from here. If price open from here, price should do something like this, create a small wick, and then continue selling because on Tuesday we actually have a reversal. On Tuesday, price is actually closed with a reversal candle and didn't close with body. But assuming it closed with a body, it means it means a continuational movement. So on Tuesday, price closed with wick and a pin box candle. So this indicates a sell. That the next day being Wednesday, we should expect more of sell in the market. So on Wednesday, the entries you'll be looking for more is sell entry. So for you to be actually not to lose unnecessarily or hit SL anyhow, maybe you see your normal structure, everything is complete, but you enter and still hit SL. So with knowledge of understanding the BS where market is actually going for the day, it will help you to reduce your what losses for the day. We are still going to enter the chart and see more on these things. So now, as you can see, for this to happen, price have actually on Wednesday, price sell on Wednesday, closing with full body the next day, which is Wednesday. That simply means on Thursday, we continue selling because this is a continuational candle, which is a reversal. So we are no longer buying, we are now selling. So if price also close with body, we also continue. That simply means on Friday, we also have more of selling. That simply means this also help us to identify how the week will go. One, which is knowing whether if the week with more of selling or the week with more of what buying. So it also help us to identify how the day will go. So if you have this knowledge, I believe it will help you. I believe I'm actually giving this knowledge free because yes, I also learn it. Although I paid for it, but it's nothing. So this thing now helps you very, very well. Once you can actually identify and spot all these things in the market, it will reduce your losses. It will increase, it will increase your win rate. Same thing here. If you are also selling, let's assume this is a Monday morning. Now on the Monday, price was actually selling. Now on Tuesday, price closed with something like this. Taking this area with week, closing with a week. That simply means the next day, if you close with a week, that simply means the next day we should expect a reversal like this. We should expect a reversal that the next day we have more of what? Bullish movement because of what happened on the recent day, which means here is Monday. On Tuesday, price closed with a week. And this is a pin box, which is a reversal. So this means we are reversing buying for the next day. Then we should expect market to do more of buying the next day. So now let's also consider the last one, which is consolidation. So with these things now, you can see that it works very, very perfect and contributes more to your win rate. So the last one we are going to be talking about is consolidation pattern. Now, how do we identify consolidation pattern? On consolidation pattern, we're assuming in a situation whereby we have a buy like this, the next day, market formed and formed something like this inside it. This is a week. This should be our Monday morning, and here should be our Tuesday. Now on Tuesday, price on the daily time frame, price was unable to take out either this high or either this low. So now on the Wednesday, what are we going to do? This is a consolidation pattern. So what I'm going to do, we should also know that this is a consolidation. Now for me, I will focus more on buying because price didn't take out this high and didn't take out the low too either. So I'll focus more on what? Buying. I'll focus more on buying this market because I will use this candle because this candle is more valuable than this one because this is an internal structure. So I'll focus on buying. I'll focus on this continuational move. That simply means the next day I'm going to be having more of buy because of this continuational move. And this candle now, I'll ignore it because this candle didn't actually take high or low. So this is a kind of internal structure. We can actually see it as a consolidation as I already mapped out on the chart. So this is for the consolidation. So the market will continue buying for the next day. So this is actually how to identify. This is actually how to identify the directional of the market for the day. So let's just go to chart and see whether if this thing I actually said actually makes sense or actually working real life or am I actually talking. So let's just go and check it. Now let me clear everything here and move to the chart itself. Now, for example, today is Tuesday. No, today is Wednesday. Today is Wednesday. Now, on Wednesday being today, let's check what market really do. This is gold. Somebody is actually drawing here. Please, that person should delete this thing, please. So this is where the market started for the week. This is on a daily time frame. Let's check whether if I'm making sense. Today is Wednesday. Here was on Monday. This candle formed on Monday. This candle formed on Monday. This was on Monday. Monday candle. This is Tuesday candle. Now, if you check on Monday now, you see something. On Monday, price created this pin box, this candle now. This is a reversal candle. And after reversal, as you can see, market keep moving down. This is a pin box. So on Monday now, let's just map out the high and the low of Monday. This is a reversal pattern. Let me go down to 30 minutes time frame and check something. Now, if you check on Monday, you see that on gold, Monday, market was more of what selling. Market did more of selling. Now, let me go down to that Monday again. Let's check what happened on Friday. Let's check what happened on Friday. Now, on Friday, market was actually selling, selling, selling. Getting to Friday, market closed with a pin box, which means a reversal pattern on Friday. This reverse pin box closed below this Thursday candle. This pin box closed below this Thursday candle. This means this means on Monday we are going to have a buy, more of buy, which this candle is actually indicating on gold. Well, let's see what happened on Monday. Let me just map it out. Between this candle now and this candle, let's see what happened on Monday from here to here. Before price created that thing on Monday. Let's go to 30 minutes time frame. Now, if you look on Monday now, you see that we have more of buy on Monday. From this area now, if you check this was on Monday, this movement that actually occurred here. Let me remove this thing. This particular movement actually occurred on Monday. This buy actually occurred on Monday. I even entered this buy. This was Monday movement. Because of what? the market showed on what Friday. So that's why this particular movement was actually working with. As you can see, it was a good movement. It was a good buy on Monday. Now, after Monday, price closed on Monday, which is with a body. As you can see it now on Monday, close with this body. And now closing, you can see that market also close above this area with body. Now, but closing on the body, it created a reversal candle pattern. This candle is actually a reversal because what we're actually doing on daily time frame is now identifying those candles, because identifying those reversal candles. Let me also show you so that we can actually be working together. Let me show you reversal candles here. Candlesticks. We are going to see everything about candle here, so that you'll be correlating with what I'm actually saying. That it will be making sense. It will be making sense for everybody. Let's check this one. Maybe to answer our question. Let me search reversal candles. This is not actually showing. Maybe you go and rectify it on your own. Maybe I will send the candle pattern on the group chat, because this is not actually showing me what I wanted to see. I have the pattern on my this thing. I'll send it on the group chat after this class. Let me just remove it and explain what I'm explaining. So sorry for the delay. This is Monday. After Monday created the reversal candle. So what are we expecting on Monday? We're expecting for price to what? To sell. Even when the structure is actually okay. Because if you check on Monday, you see that if you check on that Monday, you see something here. After price breaking this structure on Monday, because there was a break of structure here on Monday. This was a break of structure. Market mitigated here and expected to buy. The kind of change of character. Market mitigated here on Monday. And we expected to buy from me on Monday. As you can see, market also buy from that area, pushed up. Now on Wednesday, on Tuesday, we should be based on our structure, we should be expecting price to continue buying. But on Tuesday, something happened. But after Monday creating the reversal candle, something came up, something happened there. Something happened there. Market changed this area in form of change of character. If you check on Monday, we had more of selling from here, from this area now, markets because of daily time frame, because of the daily BS. Because me, I was actually waiting to see this. So I never wanted to sell. So on Tuesday, market was selling more. That's what actually happened here. Now, after Tuesday, as you can see, this candle was also a reversal candle, meaning that you can actually on Tuesday, this is Tuesday candle. Let me clear this thing. This is Tuesday candle. Market closed with body, but on a Tuesday also formed a reversal candle again, meaning that this Tuesday now we have more of buying. Collaboration with your higher time frame structure. Now, on higher time frame structure, if you check on 4 hours time frame, you see that the 4 hours time frame structure is actually saying that we are in a bullish move. Even on 2 hours time frame, which we actually mapped out here on the previous video we did on the class, you see that this was the area we're actually expecting. So now you can see that both the daily BS and the daily BS, which is a reversal candle, and the structure is actually in collaboration. That simply means I will focus more on buying this market than selling this market. That's why I was actually expecting price to come to this my POI here around this area after breaking this structure. Price should come into my POI, taking out this last structural liquidity. Then if price take that area, I will expect to buy from any area here. I expect to buy because both the daily BS and the structure is actually going in the same direction. So I'll be more comfortable trading from this area, pushing up to the next high, depending on your own system of trading, than taking other trade. Also, let's also check another pair. Let's check USD JPY. USD JPY last week was actually hitting SL anyhow. Let me show you the reason why it was actually hitting SL. Is it last week? This week, on Monday, Tuesday, I believe price market was actually misbehaving, hitting SL anyhow. Now, on USD JPY, normally if you check on 5 minutes time frame, you see that you can actually buy from any zone here. But if you go to higher time frame, which is like 4 hours, you will see the clear structure. Now on the 4 hours time frame, the structure was actually bullish because if you check it, this was the inducement where market swipe. This was the last where market changed character from here. This was the zone where market changed character. After price taking out this inducement, we had a break of structure on the 4 hours time frame. And after this break of structure, we expected this low, this side to be a protected high because of this break of structure. But what happened? Price came and take out this high. So this is where our change of character begins from the 4 hours time frame. And for that reason, price still came back and take out this area. Now, that's where I either move down to my 2 hours time frame to now, because I'm a day trader, I'm not a swing trader. I'll then move to my 2 hours time frame from here. And this is a 2 hours time frame trend. From here, you can see a change of character on 2 hours time frame. You can see a structural liquidity. This is a liquidity. Price mitigated here. I want to show you what really happened on Monday and Tuesday. Now, still on 2 hours time frame, you can see price break this structure. This is a break of structure. And after this break of structure, on the 2 hours time frame, we still have this area have already been mitigated by the market. So the last area that have not actually been mitigated, you can actually say that this area zone should be also be anticipated because it's an area of liquidity. You also have another liquidity here. So this first one is zone after inducement, which this area is still a valid order block to either buy from. And we also have this extreme area order block, which is this one. So as you can see, those two other blocks, you can see that we also have inducement above them. So now, you that is actually selling on 15 minutes time frame, the 15-minute time frame structure is actually showing what it's supposed to show. Because I know many of us chop SL. So people was actually buying from here. They was actually buying from this area that day. Some people was also actually buying from here. If you see, market actually take inducement here. And this was a break of structure. So people was actually also wanting to buy from here, but as you can see, market cleared everybody. Market cleared everybody because it was actually looking for the 2 hours liquidity. As you can see, it cleared all the liquidity from here on 2 hours. And after that, as you can see, today being a Wednesday, price started buying. So now let's check daily time frame and see the reason why all these things happen. And assuming we know this thing earlier on, You avoid all those liquidity. Now on Monday, look at what happened on Monday on USDJPY. This is a reversal candle on Monday. If you check this, assuming you know these things, this reversal candle on Monday happened. After this reversal candle occurring, as you can see on Tuesday, we have more of sell, which is yesterday, and people was actually buying. Why the market have already shown a reversal for the day. So while people were actually buying, the market was actually keeping moving because the other, which is the other day, which is Monday, closed with a reversal candle, meaning that the next day we have more of a sell in the market. As you can see, market is actually selling. Now getting to this day, which is today, which is being today being Wednesday. If you check a Tuesday candle, you see that Tuesday candle closed with the body, meaning that we have more of what? More of sell for the new. So now if you check today being Tuesday, let's check where market started doing its thing on Wednesday. Market opened around this area, being on Tuesday. On Wednesday, market opened around this area. As you can see, market sell from this area down to this other block, about 150 something piece. Now, if you check again, you see that we have more of selling for today because market have actually mitigated on this 2 hours order block, giving a change of character. So price will still sell down to this area. And if you check the time for the day, you see that this is New York session. So market will sell from here, enter this area. Maybe by tomorrow we start buying from here based on what the candle is actually showing. Maybe candle can actually end with a reversal candle or a continuational candle. So this is how to identify all these things in the market. So the time is already up. Maybe on our next class, I will show you guys how to put all those things together, both liquidity structure and daily BS. So in no distant time, market will this call will end. So we are going to do our question and answer on our general group. So this class will end in no distant time.